Some of these chapters in the textbook have this segue into the next chapter. So what we're about to talk about is in essence chapter 4, but it has it in chapter 3. So contribution format income statement. No, this is not a single-step income statement or a multi-step income statement. That's not what we're talking about. It's called a contribution format income statement or a variable income statement. It's a variable income statement, a contribution format statement, a non-GAAP income statement. Our traditional one that we've done, it's by function. You don't break out where your fixed and variable costs are. You do sales minus cost of goods sold, you got your operating expenses, all of that. Instead, and this is using operating expenses, this is an income statement. Instead, what we're going to do is separate our income statement costs into fixed or variable costs. Sales is usually per unit, so that's not a big issue. Usually your sales is per unit, so that's already a variable cost. So what we are going to do is have sales revenue, variable cost, less all your variable costs, so cost of goods sold that are variable, as well as any operating expenses that are variable, to get to what we call our contribution margin. That's why it's called a contribution format income statement. The other one, you could call it a gross margin income statement if you want, gross profit income statement. And then all your fixed costs are subtracted to get to your operating income. Now at this point in time in the course, operating income on your contribution format income statement will be exactly the same as operating income on your traditional income statement that you've seen previously. All we've done is separated out the costs between variable and fixed. This also means that you are able to get a variable contribution margin, which is your selling price minus all your variable costs. So you're able to say, every time I sell a product, here is how much I make, 20 bucks. That goes to covering our fixed costs. So the idea is that you're able to say, how many units do I have to sell to break even? Again, traditional, everything's just broken out, sales, cost of goods sold, less your operating expenses get you to operating income. You will also find in this course, we don't deal with income taxes a lot. You could have some questions with income taxes, but most of them we just go to operating income. Contribution approach, again, by behavior is how you're going to allocate them. Sales minus your variable costs get you to contribution margin. So you will usually always be doing these subtotals. One will be gross margin, which is more, I think you're more used to gross profit, so profit is fine. Sometimes we intermix them here. We'll call it a gross profit percentage, call it gross margin percentage, to get to not operating income. It can be really useful to come up with this cost volume profit analysis, being able to say, hey, how many units do we need to sell to break even? How many units do we have to sell to make this amount of dollars? It's also really good for budgeting, pricing your units. It's important to know how much you make in profit every time you sell a unit, how much you make in contribution margin, because then you can sit back and go, we better at least be making some contribution margin per unit. Otherwise, we're not going to be covering even those costs. We'll get into later. If you've got scarce resources, you can decide which units you're going to make, what type of product you're going to make. So if you're making multiple products, you might want to focus your production on the units that give you the highest contribution margin per unit, because then you're covering your fixed costs faster than something you're not making as much money on. And again, make or buy. Should you make the product and use it in some other product you're making, or should you buy the product externally and then use it in a product that you're making? So for instance, if you're making cars, should you buy, or even making McDonald's hamburgers, should you make your buns internally or should you buy them externally? Should you make your hamburgers internally or should you buy them from a third party? So the whole idea is looking at that analysis. And these are both chapter 12.